Q1CY24 Huhtamaki India Limited conference call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashvik Jain from ICICI Securities. Thank you, and over to you, sir.
Thank you, Sejal. Good afternoon, everyone. Thank you for joining on Huhtamaki India Limited Q1CY24 result conference call. We have Huhtamaki India management on call, represented by Mr. Dhananjay Salunkhe, Managing Director, Mr. Jagdish Agrawal, Executive Director and Chief Financial Officer. I would like to invite Mr. Dhananjay Salunkhe, sir, to initiate with opening remarks, post which we will have Q&A session. Over to you, sir.
Thank you. Good afternoon, everyone. First of all, thank you for joining this call. This is our 4th or 5th call in succession, and we intend to continue the interactions with community. Let me start with our safe harbor statement that what we discuss in this call may contain some forward-looking statement, but these are basically do not represent any future performance of Huhtamaki India. So with this, let me give some update in terms of performance of our Q4 24. As you would have seen, we have improved our volumes sequentially from quarter to quarter. At the same time, as compared to the previous year, the volumes were down, and that is basically impacted because of the softer market conditions and certain supply chain constraint emanating from geopolitical situation. While we are addressing how do we go forward and improve our volume pipeline, there is a clear strategy in place to address the competitiveness and focus on creating long-term profitable growth initiatives. A couple of highlights from Q1. One, we commissioned our Blue Loop investment equipments, and they are operational from the end of the Q1. And secondly, we have started enterprise-wide programs to support the efficiency improvement or operational efficiency improvements to support the profitability measures. And then we continue to invest in our operations and technology to drive the sustainable packaging solutions forward. And that's clearly indicated from some of the awards which Huhtamaki India won in the packaging space from SIES and World Star, and both of the awards represent clearly that what we are striving to achieve is clearly acknowledged by the industry. With this, I would like to hand over to our CFO and Executive Director Jagdish to take us through the detailed financials.
Thank you, Dhananjay. Good afternoon, everyone. I'm pleased to welcome you all to this quarterly investor call and to take you through the financial performance of the company for the quarter ended March 2024. As highlighted by Dhananjay, the major highlight of the quarter has been the successful commissioning of the Blue Loop facility at Silvassa. I believe this is a stepping stone in our progress towards the sustainability goals and the strategy that we have defined for Huhtamaki in the long term. Regarding the key financial indicators, the volumes have slightly improved quarter-on-quarter basis, so slightly lagged behind on year-on-year basis. The same trend is reflecting in the top line, with revenue for the quarter standing at 594 crores versus 585 crores we have in December 2023 quarter, and 646 crores we had in March 2023 quarter. This represents a 1.4% increase over Q4 2023, though a decline of 8% over March 2023 quarter. The volume or revenue decline in the current quarter versus corresponding quarter of the last year is primarily attributable for a couple of major events like higher food inflation in the first quarter, challenging business environment, and supply chain disturbances like Red Sea and all. EBITDA, if you talk about EBITDA for the quarter, it's 494 million compared to 576 million in Q1 2023. Comparing with the December, it was 618 million. And again, the decline in the EBITDA is majorly on account of additional credit impairment we had in March 2024 quarter. EBIT for the quarter, again, it stands at 399 million, down around 5% year over year. So in March 2023, we had around 420 million EBIT, and in December, we had a 506 million rupee of EBIT in December quarter. Profit before tax for the quarter, before exceptional items, is 351 million, is a flat when we are comparing with the corresponding quarter of March 2023. Net profit before exceptional or after exceptional item and after tax for the quarter stands at 260 million, and EPS for the quarter at 3.45 per share. Moving on to the debt and liquidity positions of the company. The liquidity position is stable after retirement of entire debt during the last quarter, except external commercial borrowing, that again having a statutory covenant and maturity clause. Debt equity ratio is a healthy at 0.2, in line with like what we have in December quarter. When you look at the debt EBITDA ratio, end of March quarter is 4.2. Slightly higher if you compare with the December 2023. In December 2023, it was at 3.2. And it is because we have lower EBITDA in this year due to a credit impairment. But overall liquidity remains very strong, and we do have a sizable credit lines which are not utilized at this point of time. Working capital also improved significantly when we look at a year over year, even though slightly behind when we compare with the trailing quarter. While I've said the overview of financial performance of the quarter, I also would like to emphasize that the company continues to target all the levers at its disposal for supporting the profitability and build efficiencies in the existing process. We have seen lots of actions on this front in the last year, with our focus consistently on operational excellence and customer delight. The company has a strategy in place to address competitiveness and focus on long-term profitable growth initiatives. The company has always remained committed to its stakeholders, focused on technology-enabled innovation and operational performance and realization of value for its products by engaging constantly with our customers. Like Dhananjay said, we are investing for future and sustainable solutions to become first choice in sustainable packaging solutions. We believe that this will help the company remain competitive in the long run to drive responsible and profitable growth while upholding highest standards of corporate governance. We appreciate your continued support. Thank you. Now I hand it over to Dhananjay.
Thank you, Jagdish. I think you have covered most of the points, and as you indicated that the quarter one highlight remained like we commissioned our Blue Loop assets, and then organization-wide productivity and efficiency improvement programs, which will focus on all cost levers, reducing input cost, improving our wastages, overheads reduction or optimization by restructuring, and overall improving the productivity will be the key for creating a competitive and sustainable business model. While we continue to improve that, I say we are into business of sustainable packaging solutions, and how do we make it sustainably. So we also made a progress on sustainability, wherein we are taking actions in terms of climate impact reduction, the solvent consumption reduction, water consumption reduction, improving the biodiversity wherever our the plants are. So with all these efforts, we are also making sure that we have a not only having a net promoter scores with our customers, net positive net surveys with our employees, but also net positive impact on the Mother Earth. So that's all from my side. Thank you.
Thank you, Dhananjay. So now we are open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khetan from Smith's Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, my first question is on to the other expenses. Sir, we are witnessing a steep rise in other expenses. You had mentioned that there is some credit impairment. Is this the reason, and what is the quantum of this, which has led to this higher other expense?
I can take this question. You're right. Other expenses include a bigger impact of a credit impairment, and majority of the deviations what we see compared to December quarter is on account of credit impairment.
Sir, what is the quantum of that impairment?
It's a substantial number. Like if you talk about a delta, and there are two major items which is making impact between December to this. One of them is a higher freight because we had supply chain disturbances, and the second is that we had a credit impairment.
Sir, if you can share that number of credit impairment, like 10 crore, 8 crore,
in that range only.
Okay, so this is a one-off only, right? So this might not.
Yes.
Okay. Sir, onto the volume growth, like you had mentioned that this quarter there is only slightly improvement in the volume. So considering a 2-year perspective, like in CY24 and in CY25, what is the volume growth we are targeting?
So again, we are saying that we are not giving any forward-looking kind of statements, but definitely we are working towards that. When we talking about sustainable packaging solutions, we are working with our customers, and we have definitely planned to grow our top line, and we had a focus on the bottom line. So, the actions are in place, and a lot of work is happening on to address that question as well.
I'll add to it. So maybe a little more sharper on that. Look, if you go through Huhtamaki India's financials from 2019 to 2023, so you would see up and down in terms of volume or in terms of net sales, which is definitely a product of volume and the commodity prices. So our objective is basically to look at best of the both, and how do we go back to the volume scenarios of 2019 or 2020, while keeping the overall margins in mind. So that's the goal for next 2 to 3 years horizon.
Okay. So, sir, we believe so because of crude prices going down and the majority of the raw materials like bauxite, so they were also going down. So still, sir, we are not witnessing a good margin performance. So what makes you confident for the next 2 years with the rise in raw material prices, if suppose demand also goes for a toss, so we can maintain our margins?
So one of the important, and you would have heard us saying multiple times, the blue loop, which is the monomaterial recyclable solutions, which offers us that opportunity to drive the innovative solutions in our ecosystem, and which shall help us to maintain that position in terms of margin profile, in terms of growth profile.
Mr. Ketan, may we request that you return to the question queue for the follow-up question, as there are several participants waiting for their turn. Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisor. Please go ahead.
Hi, sir. Thanks for the opportunity and congratulations on commissioning Blue Loop plant. Coming to on this Blue Loop plant, since we are so, how do we see the ramp up of this plant? Because what we understand, or how much our customer approval is already done, and how long otherwise it's not done long it will take to really ramp up this plant sending material. And if you can give some color again whether this plant will be able to cater to whole Southeast Asia and for even export market. So if you can give little more color from 2-3 years perspective, we'll appreciate.
Okay. Can we take on? So you asked a couple of questions. So let me start with the ramp up of the investment. So as you clearly see that this is one of a kind, first to the market, monomaterial recyclable solution. So customers also are taking this very cautiously, while we are in a very advanced stages of product qualification with our large customers. And in fact, some of the product lines already have started commercial productions. At the same time, this is definitely a period where we have to really preemptively work with our customers to make sure that they understand the value proposition. One is of course recyclability, and second, we need to ensure that customers also are in line with what quality expectations they have. Because this is first time. Like this is called MDO, which is machine direction oriented PE, which is a new to market, getting established. So that's one important aspect which we are managing, and we are in a very advanced stages of commercialization. So I think we can see a gradual ramp up in coming quarters and years. That's one. Second, about this supplies to Southeast Asia or to the exports, yes, the plan is clearly not only depending on our India region, but wherever we are right now supplying to our export customers as well. At the same time, we have invested this kind of technology in another 4 locations globally, worldwide, within Huhtamaki. So we will be also looking at overall manufacturing and supply chain basis that we might be taking the calls in terms of where that supplies comes from and goes to. So at the same time, yes, there is a plan to continue exports as well from these lines.
Can we expect, sir, this, it may take 2 years to reach kind of, breaking even, or it is less than 2 years? And second question on this is particularly for food packaging or this monomaterial exact application, if you can also give little more detail.
Sure. So if I have to look at how much time break even or turn around, I can be only say we are so excited about this. If some of the customer products click it can actually completely fill in within a few quarters. So that's the aggressive, the product proposition is. The second question you asked is about this is a food application also, and I think maybe next time we will add in our investor presentation the what was the past structural barrier properties of the current structures versus what we are offering. I think we will definitely would like to give it to the market, where what are we trying to do is essentially we are able to replace even aluminum foil with this kind of solutions. So it is not only about the food application, but the aggressive applications of any nature, like hair products or the food products which are also aggressive, like citrus acid based products and so on. So applications are wide range. And I cannot claim, but we will add this to the next time that we are offering the barrier properties of as good as a replacement of aluminum foil.
Okay. And last question, sir, if with your permission. So recently our company has discontinued operation in Malaysia. So how do we see that India as supplying to that market, and do we have any possibility of we can get a large chunk of Malaysian market also?
Yeah. So you would have read that news article. Basically, that factory or that product was basically the food service and not the flexibles packaging. So, in fact, Huhtamaki as a globally had taken, as I said, enterprise-wide program, which is basically we are relooking at our manufacturing footprint, our distribution footprint, warehouse footprint, and that's a part of that. So even in Malaysia, in that region, we have also other, essentially, we as a Huhtamaki, we are into three segments. One is flexibles packaging, second is fiber food and services, and third is in North America, which is on-the-go food. So this plant, which was closed, is part of a global segment which is called fiber and food service. So that's basically a different segment. So not having any per se product connection with flexibles packaging. But however, as a Huhtamaki whole, it reflects our initiatives to kind of consolidate operations and improve the overall long-term growth as well as profitability.
Thank you and all the best, sir. And I'll rejoin the queue for further questions.
Thank you.
Thank you, sir. The next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead, sir.
Hi. Thanks for the opportunity, sir. So would you again elaborate on this credit impairment, because I'm still not able to understand. Means it is a write-off, and what is the quantum? So what exactly this credit impairment is?
Mr. Vipul, I think the similar questions asked earlier also, and we said that this is definitely when we are saying credit impairment is in the nature of kind of a write-off only, which is going to happen. So right now it is a provision stage.
And you didn't quantify the figure, sir. So would you please do it, sir?
I think numbers, we said that major deviations what we are talking about between the December and March quarter is because of credit impairment only.
No, but what is the exact number that I am asking, sir?
I mean, we definitely can talk about a very specific number and all, but when we talk about credit impairment for specific, it talk about ECL approved provisions and also it got many more things. But one specific item to isolate is difficult, but majority of that gap which we are talking about is because of credit impairment.
Okay, and sir, what is the absolute net debt on books on 1st April, and what is the ECB component in that?
So whatever debt we had, that is on account of ECB only. And you can see definitely from our December balance sheet that ECB numbers were 200 crores. That remain as is even 1st April 2020.
So that we cannot repay due to contractual obligation, right?
I mean, there are rules, there are FEMA guidelines, so that there are RBI rules that there has to be average maturity period for loans, so that we have to follow.
And sir, my last question: what percentage of our turnover do you expect to come from this new trendlyne Blu-ray products over next 2-3 years? So, can you share any ballpark figure?
No, I mean, at this point of time, it is very difficult. Like the manager said that we are working with our customers. We are looking at wider scope of the applications, and I mean, there are immense opportunity for that. But I think we have to wait a little bit more to have that concrete visibility on that.
Yeah. So to add to Jagdish's point, look, we are in a derived demand industry, right? So our products are sold to our customers, which are basically large consumer packaging goods companies. And if you see two aspects coming in, one is a regulatory push on the recyclable packaging products, and the customers, various customers, which are our large conglomerates, they are also doing certain promises. So if we combine these two together, that's where you can look at. Today, currently, we have somewhere our recyclable product stands at around 30%, 25 to 30% range. And if we look at our customers' aspirations and regulatory requirements, possibly we could see that it's definitely moving at a faster rate in next 2 to 3 years, and we should go more than maybe 60-70%, and that's where we also want to be party to.
Will it be margin accretive, sir?
Sorry?
These products will come at higher margins?
So again, it depends upon the products, the mix, as well as the categories which we work with, right? So let's say there is a pharma, there is a food, then there is a personal care and home care and health care and so on. So it depends. So really putting whether they will be margin accretive or not, that can't be predicted. But only one thing which we can predict is basically they will be accretive to the Mother Earth.
Okay, thank you, sir. Thank you very much, and all the best for the future.
Thank you.
Thank you, sir. The next question is from the line of Saurabh Patwa from Quest Investment Advisor Private Limited. Please go ahead.
So thanks for giving this opportunity to ask the question. Sir, just wanted to understand, sir, you have, I think in last few quarters, we took several actions, both in terms to improve profitability. I think there were two-fold actions which you have called out and implemented. We came out of certain businesses which were fundamentally margin dilutive. In against that, we also cut down cost in terms of employees, in terms of reducing your manufacturing footprint. So just wanted to understand, sir, where are we in the journey? So we believe, I think the pace of fall in sales seems to have been controlled now. Have the costs also been controlled now? So incrementally, both the revenue and cost should increase? That's the first question, sir.
Okay, so let me answer that, sorry about that. So if you look at our margin, look at last 4 quarter kind of a margin we had. And if you go back and look at our margin of 2022 for individual quarters, we find that there is a significant improvement on our operating margins. And this improvement is happening because a lot of actions are happening on the ground, whether we talk about bringing the operational efficiencies, whether we talk about footprint optimizations, when we talk about process improvements, whether we talk about right-sizing of team and all. So those are helping us, and we are very close to, if you look at our EBITDA margins and all, we are very close to 8-9% kind of a range we have in last 3 or 4 quarters.
Mm-hmm.
Having said that, if you are able to maintain that, and that is what we are looking, apart from that, we are saying that we are moving into a program which we have already started, is that, again, how we are going to have operational efficiencies. And when we talk about operational efficiencies, is about definitely reducing the input cost. We are talking about the wastage reductions. We are talking about overhead optimizations. We are talking about improving productivity. But when we talk about the bigger actions, which already happened in 2023, now we are going to have an incremental impact of those, and we are going to continue to drive. And it's like a process excellence or continuous journey. So we'll continue to drive to bring as much as possible the operational efficiency and operational improvement. And that definitely is going to help to maintain our EBITDA or EBIT or operating margins in the range what we are looking at this current space.
Sir, so is it fair to understand, sir, that in terms of products where you believed historically you believed the margin profile was weaker and you wanted to exit those businesses, that is behind, right? So incrementally, while on macro may impact the journey, but in terms of your product categories where you want to do the business, that journey is already done.
I mean, in a way, yes.
Okay. And on this blue loop, I believe from the presentation, what I can understand is that towards the end of the quarter, this is where the new facility was launched. So the cost associated with the blue loop facility in terms of new employees and any other additional costs which you would have done, so have they already been taken care of? If not, how much would be the impact from in the coming year? Because while revenue will take time, is what I would understand from the conversation so far.
Yeah, so I mean, ramp up have its own pace, and the ramp up is still going on for, we've already started building on these blocks from last couple of months, and I'm not expecting any significant cost is going to go up in the subsequent months and quarters.
Okay. And so in terms of depreciation, so we have already, I think our depreciation is, with the change in the policy, our depreciation numbers have come down sharply. They continue to come down this quarter as well. Is this a fair number from going forward, or is there still some scope there where you would be continue to reevaluate your depreciation policy?
I think these numbers are going to stay, and there will be impact to the extent of new capex additions. Otherwise,
yes,
more or less going to stay.
Okay. And so with this current rise in oil prices, have you seen an increase in the raw material and have been able to pass on some of it?
I think it just started when we talk about crude prices, Brent prices, and all these are moving in the range of 85, 86 and all. So we have to really wait and watch and see the real impact, how this translating into other commodity prices. Maybe probably in a few weeks' time, we'll have better clarity on that.
Sir, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. The next question is from the line of Saket Kapoor from Kapoor & Company. Please go ahead, sir.
Namaskar, sir, and thank you for this opportunity. Sir, as you mentioned about the this impairment part as the differentiation in the other expenses between December and the March quarter. So this, if we remove this one-off item, then our comparison with last year March quarter, are the margins in the similar ballpark only? This one-off item, if we knocked off, is it a fair comparison then?
We are very close to that. Yes. If you remove aside that impact, we are very close to that.
Okay. Because this was not a line item which was relevant for the March quarter 23.
Yeah. Yes, absolutely.
Right. Sir, you have spoken in length about the Blue Loop and that getting accredited and acknowledged by your customers. Sir, I think so one of our large customers did came up with the numbers yesterday. I'm talking about Unilever, and their numbers looked depressed and the margins also contracted. So on account of their demand and the pricing part, what is the fillers from them? And also, sir, you have earlier spoken about the fragment nature of the industry. So, how do you think the pricing power, we would be having the pricing power to get Blue Loop into the foray? I think so that will have a difference in terms of pricing and will not be a commoditized product. So if you could just explain the business environment currently in terms of your buyer's potential to accept the product and pay you higher price.
No, you're right, Mr. Kapoor. I mean, if you look at last couple of months, it was very challenging, and you have seen the influence of many companies. There is definitely the pressure on the bottom line. But our focus is, I mean, whatever we can do within our influence, span of influence, we are doing to improve our operational excellence and efficiencies. And that's one of the reasons we are able to maintain our operating margins. Top line definitely is under pressure, and we are also very careful about to ensure that how we are going to maintain what we are trying to what we had in the last couple of quarters. So we don't want to dilute that, but definitely our focus is to have both top line and bottom line maintenance and improvement on that.
So maybe I'll add to Jagdish's point. So if you see last couple of quarters, we had added one slide or one comments on our Blue Loop offerings, and if you go back to that, I would say we are offering power of 3. What is that power of 3? One, we are offering recyclable solutions. That's one. Recyclability is one first power. Second, those products or solutions will be running on the customer's machines without much change. So customers are not expected to change their lines or add some capexes, or there will be no impact on their productivities. And third is affordable, because see, it's very, very easy to say this is not commodity. Exactly, it's not commodity. But at the same time, in order to have push our innovations through the customers' lines, we need to also make sure that it does not come at a very differentials. Otherwise, adaptation might get delayed. So we need to have a very fine balance in terms of how do we maintain our pole position, which is a differentiation. At the same time, it is also acceptable to our customers, because it also, as you said very rightly, and not only the customers you mentioned, but also in general FMCG results, except for some of the companies, they are really muted. And in fact, one of the CEOs said openly, there is no price in the market, and that reflects overall. So, and we are the their ecosystem, right? So that's where we are really playing a very golden mean, so that our products are acceptable to them. At the same time, we keep the differentiating.
Right. So just to conclude, the acceptance part, can you comment how is since you are now commercializing the Blue Loop facility, so definitely you must have got the acceptance part, the feedback from your key customers. So if you could share what's the key takeaways in terms of the acceptance, and then on the employee cost part also, sir. I think so. Lot of rationalization has gone through in closure of some of the unit and now commercializing a new facility at Silvassa. So what kind of further rationalization can we expect, especially in terms of the employee benefit expenses as a percentage of sales? And if time permit, I will chip in with one small point.
So acceptance-wise, that's what I said. We are replacing certain parameters, and the structures which we are offering to the customers are really attractive, and they are getting really run well on their machine. So from that acceptability point of view, we are really making very good progress, and that's where now almost we are in very early stages of, or I would say not early, very forward stages of starting the commercial supplies. On the second part, maybe if you can add on the employee cost, Jagdish, you can.
Yeah. So, Mr. I think employee cost, we're not expecting is going to change significantly, because we started doing that ramp up from last few months. So we are not expecting any number is going to go significantly higher side in Q2 or Q3. So we are within our means on that.
Mr. Saket, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from Rohit Suresh from Samatva Investment. Please go ahead.
Hi sir, good evening and thank you for the opportunity. So my first question is to Mr. Dhananjay. So it's been a year and a half since you have joined the company. What are the major changes that you have seen, both in terms of the positives, and if there are any areas, where you want to see some more improvement? So very broadly, I want to understand your picture, what has happened over the last one and a half years.
First of all, thank you to remind me that I'm already 18 months old in this company. Such a nice feeling, yeah. So look, I think one very clear positive aspect of after joining in here, and I can be very proud to say this, and my colleagues here are listening to me, that I'm incredibly proud of working with this team of Huhtamaki India. Such a talent is available, and very driven and passionate. So I that's what I really surprised. I mean, when you said you are 18 months old in this company, I never felt that way. And in that 18 months, if I look back, what we really drove, I think one of the critical pieces, we drive our strategy execution very clearly. So one large takeaway, that this strategy was there in the making for last few years, and what we did was the active and accelerated that strategy execution. So be it was the footprint optimization or so on and so forth. The second one is, again, in our conversation you would have heard, we took up pole position in terms of our product portfolio. So we took it a very hard look at what products which we are making and selling, and in last year's first and maybe first 4 or 5 months, we took that calls, and I think you can see this clearly reflecting in our margin profiles. That's second one. The third one, apart from the network optimization or so on, another good thing what we did is we also consolidated our offices. Now, we are now in Thane, in Hiranandani Estate, Bellona, where we have a consolidated office space, and then it is becoming a hot hub for all the employees coming in together, having a very good collaboration and discussions together, and creating something of nature of blue loop. So that's the three, four things I would really articulate happening very well. What can go well, probably or could have gone well, in spite of taking a call on the volumes and portfolio optimization. I would have still loved to have a bit of a better volume growth. That's definitely one. And second, we are in a transformation, right? So we are last year we kind of optimized our network and so on. So how much we communicate internally, externally is still a lot to do on that. So some customers might not be very happy with our some plants closure or some employee. So essentially the stakeholder management, the more communication, even though we did really, really well, still I would say these two aspects would have been still can be better. Volume development and various better and better communication could have been still better. So that's the two aspects I would say could have been better.
Great, sir. Thank you so much for the elaborate answer. So my second and last question would be on the demand recovery side. So are you seeing any particular segments where demand is recovering much faster, or are there any segments in particular where you see it might take much longer than what you had expected?
So as you would have seen commentary from mostly FMCG companies last 10 days or so, I think everyone is expecting demand, food and beverage demand to come back, or food I would say rather, on account of better than monsoons. Second, I think heat wave or summers, even though they are delayed by maybe a month or so, that is coming in, and I think food and beverage demand probably shall be going up. Then good monsoon will also means the pulses and all this stuff, pharmaceutical, the fertilizers and so on will be better. And other than that, we are also closely working with pharma companies and so on. So that is where we see that it might be improving. The reason for that is lot of regulatory interventions are now happening in that space, and that would be really looking at certain changes in our customer profiles, and I think that's where we are expecting that it may come back to the players like Huhtamaki, where we are known for our quality, compliance, and ethical standards.
Great, sir. Thank you so much, and wishing you all the very best. Thank you.
Thank you.
Thank you. The next question is from the line of Madanlal Jain, who is an investor. Please go ahead, sir.
Hi Dhananjay ji, or hi Jagdish ji.
Hello. Good afternoon. Good afternoon.
सर मेरे बहुत सारे प्रश्न हैं और एक चीज समझ में नहीं आ रही है सर. इतने पैसे हमारे टोटल में अभी इन्वेस्टेड हैं और उसके बावजूद भी जो मामूली प्रॉफिट हम बना रहे हैं ना सर, ये आखिर कब तक चलता रहेगा सर? सर
यस. सो
आप जब मैं आपको कंटिन्यूटी में और दो तीन प्रश्न पूछ लेता हूं सर, कि आप जब भी कंपेयर करके आप जब रिप्लाई करते हो तो 21 और 22 2021 और 2022 की बातें करते हो सर. वहां पे तो लैग इफेक्ट था कोविड के कारण. डीओपीपी ये जो फिल्म वगैरह आप परचेज करते हो वहां वो बहुत हाई प्राइस हो गए थे, तो आपके लैग इफेक्ट में वहां असर हुआ था. अभी भी आप जब भी उन्हीं को अगर बेस बना के अगर आप बात करोगे तो सर ये तो कंपनी इसी प्रॉफिट पे रहेगी ऐसे लग रहा है मुझे सर. सर प्लीज सर.
Okay, so Aditya, thank you for asking this question. But again, I'll first talk about the performance what we did in the last 3 or 4 quarters. in last 3 or 4 quarters, if you had seen the results, I'm sure you appreciate that our operating margins are coming into a sustainable level and at least consistent level. We are talking about 8 and 9 kind of % of operating margin. Again, we'll go back because when you had a base and you want to improve on that base. So the base, if you are talking about 2021, or when we talk about 2022 is better than 2021, and if we talk about 2023 is better than 2022. And definitely we are working towards how we are going to improve it further on. So there is a consistent approach is there. There is a sustainability. Whatever we are doing, we would like to sustain it. So sequentially, if you look at, there is a good progress on that. Now, having said that, there are a lot of things which is also happening where we spoke about that at an enterprise level, at a company level, we are driving a lot of initiatives which are going to help us to improve overall, I'll say competitiveness in terms of how we are focusing on our operational efficiencies, how we are focusing on our input cost, what we are doing on optimization of our overhead cost and all. All in all, if you look at, there is a good progress, there is a good rhythm is there to ensure that whatever is there, how we are going to maximize the value and how we can improve the total shareholders value in the entire game.
सर मेरा एक लास्ट प्रश्न है सर, आपको अगर वॉच करोगे 2015 से 2024 में अभी भी वही प्राइस स्टॉक मार्केट में शेयर प्राइस वो चल रहा है, क्योंकि कहीं न कहीं ऐसा काम हो रहा है कि हम प्रॉफिटेबिलिटी में सक्सेस नहीं हो रहे हैं। 2015 में 1000 करोड़ का सेल्स था, 1100 करोड़ का, और आज हम सेल्स 2600 करोड़ के आसपास पहुंच गए हैं और शेयर प्राइस वही का वही है। ये इंडिकेट करता है वी आर लैकिंग लॉट ऑफ थिंग्स, ऐसा मुझे लग रहा है, क्योंकि स्टॉक मार्केट फ्लेयर अप कहां से कहां पहुंच गया और हमारी कंपनी को न पसंद किया जाता है और न ही उसके अंदर कोई वैसी ग्रोथ दिख रही है। तो 9 साल से इस तरह के सदमे से पहले जो आपका जो भी एबिटा था उसमें आपको अच्छा खासा डिप्रिसिएशन या इंटरेस्ट कॉस्ट वगैरह बहुत अच्छे थे। अब तो आपने डिप्रिसिएशन भी नीचे ले आ गए और आपके पास अब डेट फ्री भी हो गए और 8 साल से तो आप डेट फ्री थे ही नहीं। अब डेट फ्री में भी अगर ऑपरेटिंग प्रॉफिट 250 करोड़ के वहां तक नहीं पहुंच रहा है तो ये सोचने वाली बात है सर कि 1500-2000 करोड़ का लायबिलिटीज के साथ हम असेट्स रख के हम अगर मीगर 100 करोड़ का प्रॉफिट दिखाएंगे, 125 करोड़ का प्रॉफिट दिखाएंगे, तो ये आश्चर्यजनक होता है कि इतने साल पुरानी कंपनी आज भी सेल्स इतना जंप होने के बावजूद भी ऑपरेटिंग प्रॉफिट में सक्सेस नहीं हो रही है। यानी कि एम्प्लॉय के लिए ही ये कंपनी चल रही है और शेयर होल्डर्स के लिए कोई सोच भी नहीं हो रही। ये ऐसा मेरा मानना है। अगर मैं कोई सब गलत यूज कर रहा हूँ तो एक्सट्रीमली सॉरी सर।
No, Madan, it's not about, you're asking questions what you feel is right, but if you look at the progress, we have to look at the progress also. We cannot discount the progress what we have in last 3 years. And if you look at the progress also, there's a positive progress. There's a consistency in the results also. There's a sustainability in what we are promising. So we have to take everything into account and definitely, together with all your support and all, we are going to drive and we are going to ensure that how we are going to maximize the value of our shareholders as well.
Thank you, sir. Thank you very much, sir.
Thank you.
Thank you. The next question is from the line of Vipul Shah from Ripple Wave Equity. Please go ahead.
Thank you for the opportunity, sir. Just wanted to understand a couple of things. We've rationalized the manufacturing factories over the last year or so. And also going ahead, going with that, we've also rationalized a lot of headcount. So just wanted to understand the employee cost number which we have reported in this quarter, which is around 61 crores. Does that also include the annual hikes which the company would have given, post the closure of the financial year for calendar 24? And is this a sustainable number to go ahead, for this calendar?
Yeah, so normally, increment cycle, most of the companies starts from the April. Same with us. So if we compare March 23 versus March 24, definitely there is an element of increment, yearly increment in that cost. Is that your question, Mr. Sam?
Yeah, I mean, March 23, our employee benefits was around 60 crores. Right now it is around 62 crores. So what my question was, sir, essentially, whether the increment cycle has been factored in, and the number which is appearing in this quarter is the annual number which, number which we should annualize, or, the increment cycle will come in the next quarter, which is the coming quarter.
It is going to come in the next quarter.
Okay. So that was first question, sir. Second question, sir, there is a little confusion, and I really don't understand the hesitancy in, at least sharing the actual number for the credit impairment, which is, as we all understand, it is a one-off. I believe the Indian investor community has evolved, sir, and they understand that these items are not to be considered in the normal course when you evaluate a company basis which you make an investment or you continue to hold an investment. So the confusion was, sir, that the delta between other expenses between March 23 and March 24, which is 12 crores, or whether you should look at a quarter-on-quarter delta, which is 15 crores. Is that the number for credit impairment, or is it something in between both of them?
I think mostly, it's very close to what we are talking about between March 23 to March 24.
Got it, sir. Got it. So that is really helpful. So last question, which if you allow, sir. And again, it's on a very, something to, take back to the global management. Is a lot of companies, MNCs in India, sir, they believe in a single consolidated entity with all businesses in one listed entity. We clearly, flexible packaging is a huge business for Huhtamaki in India. But has there been any thought process of, bringing also the food service business in India under the listed entity fold so that you have one Huhtamaki?
So that food service business is very small, and as I said earlier, we have three segments, and each segment has its own expertise. So fiber food service needs certain expertise on the paper side of it. For the flexibles, where we are, is basically expertise remains on the PE, or we can say plastics. So, and considering the huge difference in the size of operation, the target market, and the focus area, Huhtamaki per se do not see that as I would say a large synergy. Otherwise, they would have operated it as a globally consolidated way, right? So that's one very critical aspect. And in India particularly, that FFS, what we call, is very, very small business. And so essentially, Huhtamaki would like to continue to look at it as a separate entity.
Sir, may we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I wanted to know what will be the what will be the revenue potential of this Blue Loop plant on full capacity, and what is the total addressable market size which we aim to serve with this plant?
Again, these are very dynamic kind of a situations, and it's kind of evolving. It's very difficult to comment. Even if you look at Mr. Ketan today, when we talk about recyclable product sales, we are in the range of 25 to 30%. Now, this Blue Loop is a different kind of, it's like a monomaterial, which is also going to add to our overall recyclability or sustainable product portfolio. So it's very difficult to comment exactly how much it is going to add to the portfolio and what's the addressable market. When you look at a market is a big market. It's a huge market. Flexible packaging is a huge market. And from our perspective, I think a lot can be addressed through this. But again, these are very, very dynamic, and we also, as we are moving, we are going to have more clarity, and we'll continue to share more and more clarity on this.
Okay, got it. Thank you.
Thank you.
Thank you, sir. The next question is from the line of Aditya Ketan from Smith Institutional Equity. Please go ahead.
Yeah, thank you, sir, for the follow-up. Sir, onto the Blue Loop brand, sir, is it possible to quantify what is the capex we had done for the last 2 years? And as said by an earlier participant, if you can share at peak utilization, what sort of a top line can this Blue Loop can generate?
I think capex is again, we don't generally talk very specific about a specific item, but if you look at, we had a substantial capex in last 2 years. You can go through our annual report for 2022. You'll see that there is a substantial capex we had on entire portfolio, not only Blue Loop, but we did. I mean, they're always you are adding something or you are doing something on that. Now coming back to again, I said that. Again, it's very dynamic, and we do have sustainable product solutions at this part of 25 to 30% sales we are doing in that. Blue Loop is going to add and complement on top of that. It's going to monomate shell, and we are going to add more and more better visibility, and we'll be able to share more concrete things in times to come.
And what was the capex figure, sir, you mentioned?
Capex, if you look at our annual report of last 2 years, you'll see that we had a substantial capex, but to isolate a capex for a specific project is difficult.
Okay. And sir, so no worries on the capex, sir. If possible, you can share how much capacity addition is done by this Blue Loop on the base capacity?
So again, capacity will be determined with many multiple factors are there. There are lamination capacity, there is a printing capacity, there is a sheeting capacity, there is a film making capacity. So there are different parameters where we talk about the capacity. So again, I mean, adding some equipment, machines, and something, it's very difficult to say that we have incremental of this capacity and all.
So, sir, I know, sir, if you're not sharing anything onto that front operational side, sir, what incremental top line we can get if we can share a base number that would be helpful, sir, for analyzing us?
Again, not necessarily it's going to be incremental number. It can be replacement, like we are talking about. This product has a capability to replace even aluminum foil kind of application. So it's not necessarily it's going to be incremental. It can be replacement with sustainability. Our focus is that how we are going to have a more sustainable product and how we are going to have more impact on the planet. At the same time, definitely, growing our top line and bottom line.
Got it. So just one last question, sir. What is when we sell a plastic film and we sell a Blue Loop plastic, so what is the difference in terms of margin? Suppose if a normal plastic bag, so that sells for 8 to 9%. How much does this Blue Loop sort of a product? What type of margin this product sells at?
It may not be specific to margin, but I'll say there are 3 key properties which we are talking about Blue Loop. One, it's a sustainable. Second, it's adaptable. It's very easy to adopt. And third, it's affordable if we talk about overall product portfolio point of view. And definitely it has a capability of reduction of the plastic also. So there are many solutions where there are 3 ply or there are 4 ply that can be converted into 2 ply or 3 ply. So overall the reduction of plastic going to help in terms of affordability.
Sir, in terms of margin, so it is a 20-30% premium product as compared to your base portfolio. Would that be okay?
Again, you might find it a little bit not so specific, but it depends on application to application, product to product, customer to customer. So we can't put a specific margin premium on that, but what we are saying is that the overall solution is affordable, adaptable, and sustainable.
Got it. Thank you, sir.
Thank you.
Thank you, sir. The next question is from the line of Nirav Saxena from Living Root Analytics. Please go ahead.
Yeah, I just had one question. So, sir, what is the crude price level at which we are sustainably able to operate?
I believe that the ongoing prices, which are in the range of, I believe, $85-86 per barrel, is that what is ongoing prices. And again, when the commodity prices go up or there's a high inflation and all, we definitely have to see that how we are going to engage with the market factors and how we are going to leverage and how we are going to maintain our. But definitely, if they are going to inflation, it has an impact on the bottom line for sure.
So, sir, let me rephrase my question. At what level of crude prices will we be able to maintain our current margins level?
So, crude prices will have an impact. That impact comes through a regional prices, and then how the regional prices are going to come. If I say that 85 is a number, 82 numbers, 80 numbers, it won't be right on my part. It depends on what kind of contract we have a customer, so we are going to have that lag impact passing on to the customer. So there are multiple factors. And
so a range would also work out.
Sorry?
A range like
when we started making, this year 2024, thinking that how we are going to have this quarter and all, I think that range was like 81, 82 dollar was going on, and we had that in mind. But again, I'm saying that when you have inflation in place, definitely you're going to work in market factors, your customers and all, to see that how the impact is passed on to the customers.
Thank you.